about 1.5% or so at this point in time. Let's talk about earnings now. HSIL has also come out with its fourth quarter numbers. Their sales were up, but their net profit overall in the fourth quarter was down about 38.9% on a year-on-year basis. We are now joined by the management who will take us through how the earnings were in the fourth quarter. We've got Mr. R.B. Kabra, President at HSIL, joining us here on NDTV Profit. Many thanks, sir, for joining us here today. So let's talk about the performance of the company in the fourth quarter. Your net profit has gone down. What happened in the fourth quarter?
Good afternoon. Actually, the net profits in the fourth quarter has grown up substantially. If you analyze the results what we have published, there was an extraordinary profit of 24 crore rupees in the fourth quarter of last year. That was on account of sale of a subsidiary company which had certain assets and nothing to do with the operating businesses of the company, and the sale disinvestment resulted in 24 crore rupees operation, the extraordinary profit in the Q4 of 2013. If you take that extraordinary items out, the profits have grown in this quarter. Actually, this quarter has been a result quarter for the company. We had gross revenues of 666 crores and EBIT at 80 crore, which is the ever highest for a quarter in the history of the company. This has happened on very high growth in the building product business. In the Q4, the revenue in the building product business have grown up by 24%. That was on the quarter on quarter, and in the sequential quarter, the sale has grown by 27%. The EBIT margin in this business of building product has been 23% in Q4, which was 18.5% last year. So there is a substantial improvement in the building product business in terms of revenue. For the year also, the sale has grown by 18% and the EBIT margins have grown by 2% for overall for the year. And that has happened because of the higher contribution of the high-end product sale,
right,
as well as lot of focus on the cost control.
Okay. And so what about your container glass division?
The glass business was a drag this year, but if you see sequentially, there has been a substantial improvement quarter on quarter. Q2 was the worst quarter where we had a lossage of around 25 crore rupees, which reduced very substantially in Q3, and Q4 it's positive. So the glass business, we say that the worst is behind us, and going forward we are seeing the pickup in the market. We have started getting some price increase to pass on the costs. So the going forward, see that year 14-15, the glass business will remain positive with the 15% growth in revenue and the margins also going up. The building product business for the year 15, we had given the growth targets of 25% in revenue. That is possible, that will be possible. The greenfield, which was under commissioning for last 18 months, which will give us an additional revenue of 100 crore rupees in the faucet, and the other building products will grow by 20-21%. So based on that, we are very confident of getting 25% growth in the year in the building product division, and glass division will grow by 15%, I just mentioned. We will be able to maintain the margins in the building product business, which has been healthy and have been growing continuously for last 4 or 5 years.
Sir, want to understand how are you looking at the product mix in FY15? You said faucets will contribute about 100 crore more. What will be the focus? Which is the high margin business? How will you change the product mix?
So the high margin business is basically when you say in each segment we have the products at various price points, and we talk of premium products. The margins, of course, certainly there are high. So we have brands like Hindware, we have brand Hindware Art, we have Hindware Italian Collection, and we have a very top end brand QO. So when we say that the high end percentage is increasing in the year 13-14, the high end brands have contributed around 53% of the revenue, which are the Hindware Art, Hindware Italian Collection and QO. In this year, going forward, we are targeting from these brands revenues of around 56-57% contributing into the total revenues of the building product division.
Right. Then how much will you spend on brand building? How you also said that you rationalize cost. Could you see your marketing expenses going higher in the year ahead?
So the absolute amount will go higher in terms of marketing expenses. We are the number one brand in the country in sanitary ware space, and that has been possible because we have been continuously spending money on the brand building above the line and below the line, improvement of showrooms of the dealers, on the print and the electronic media. Going forward, we will only strengthen these, and the QO brand, which has only completed the first year of its launch, will certainly require bigger expense. So the absolute amount in terms of sales and marketing will go up for all the brands put together. But in terms of percentage to sale, it might remain slightly lower than what, because the sales growth is 25% as projected, and the expense may not go in proportion, but yes, it will be higher by 10-15% than this year.
You said that worst is behind us in your glass business in particular. So would you be increasing your investment in that division to boost sales further?
No, the glass business does not require any investment at least for the next 4 years, except the maintenance capex of 3 to 5 crore rupees per year, which is required for any manufacturing unit. The capacities what we have today is enough to take care of the market demand and our growth projection for next 4 years. So there will be no capex on the glass going forward for at least for the 3-4 years. Our board meeting yesterday had approved a capex of 60 crore rupees for the brownfield expansion into the building product. We will be enhancing sanitary ware capacity by 100,000 pieces at our Bahadurgarh plant. And those 100,000 pieces will be only high-end pieces.
Right.
Demand of which is growing in the market. So that is the 60 crore we will be spending on the building product in next 12 months.
Right. All right, Mr. Kabra, many thanks for joining us here on NDTV Profit and sharing with us your plans for FY15. So you will be spending money, you will be investing in your building products division, but no capex required at least for the next 3 to 4 years for your container glass division. The stock currently is up about a little over 3%. On this note, we'll slip into a very short break. A lot of things lined up after that, so stay with us.